Shree Cement is flat in trade, but if you look at the others, South Indian companies, or India Cements is down about 4%, Ultratech Cement has lost over 1%, NCL Industries is down close to about 1.5%. So quite a few cement companies are under pressure. Anisha is here to tell us the reason why. Anisha, Bank of America Merrill Lynch has picked up that the price hike which these companies had undertaken has been rolled back?
Oh, well, yes. A few weeks ago, we were seeing all these cement companies rallying, especially the South-based cement players, given the fact that they had taken some price hike anywhere between 25 to 50 rupee per bag. Now, BofA today has written a note and they observe how the price hike has been rolled back when it comes to some regions, that is ex-Karnataka. So they say that the price has been rolled back anywhere between 10 to 20 rupees, and that means the net effective hike is anywhere between 25 to 30 rupees. So yes, there is still a hike, but it's not as much as the street anticipated earlier. Now, why the price has been rolled back? Because there is muted demand from all these regions, and that's why they could not sustain the price hike. As far as the other regions are concerned, they say that the prices in the west region as well are a bit capped given the surplus capacity in the southern part of the country, as well as when you look at the central and northern parts, there would be a bit of a slowdown when it comes to the volume as well as the overall demand, given that it's the month when we have the holy holidays and the labor goes for an extended holiday in that sense. So the construction activity comes down. In fact, BofA believes that overall they are going to see a bit of price being subdued for the next 12 months, and that's why they have the underperformance rating on a couple of these stocks. We had a word today with one of the experts as well, Sanjay Larivara, and he believes that the prices have been stable when it comes to the northern and western regions. Yes, there's a bit of pressure in the southern regions, but nonetheless, volumes have been robust, and that I think is a bit of positive. Hear him out.
Well, it's partially correct. Let me just clarify that there are two major segments the cement distribution is divided in. One is the trade segment, which is basically the retail and the individual housing, and one is the non-trade, which is mainly projects and infrastructure. Now, the trade segment, which is servicing the retail and the individual housing, has moved up in February very substantially, and also moved up in March. Though not as substantially. That has held steady because the demand from that sector is quite stable. However, on the basis of, well, I should say optimism that the prices which were increased in February in the non-trade project segment also, which had held, the manufacturers had increased prices in that same segment again in March. There has been some resistance in those prices, and project prices have reportedly come off in certain segments, especially in Andhra and parts of Tamil Nadu. However, since the demand is muted, these may be rolled back somewhat, though not substantially enough to come back to February levels.
So what was perhaps a 10% increase has now become an 8% increase, you're saying?
That is correct.
Okay.
That is correct. Yeah.
What about other regions? I mean, we did hear about South, but are other regions witnessing rise, fall? If you can just map the price moves.
Well, I'll tell you, the demand scenario is pretty good in West and North. Okay. However, the prices have been very stable. There has been very minimal increase, I say about 5 rupees per bag, which is really nothing in this kind of peak period in the West. Pune has been steady, Nagpur has been under pressure. So we are seeing central India, northern and western all being steady, although the volumes are going up because availability has increased substantially and logistical costs having been coming down. The other regions have been able to infiltrate further away. So what we are seeing is a very stable pricing in the other regions, rather than going up.
For the last few quarters, the cement companies have been facing a lot of pressure on the operational front because of rise in costs, raw materials, fuel costs, etc. What do you see as a trend for the next few quarters?
Well, logistical costs have actually not gone up substantially since the last 2 quarters, and I don't think there's a likelihood of those going up. Power, yes, maybe a slight increase. However, if you see the contribution of these costs vis-a-vis the cost per ton, then even a single small increase in prices can offset these costs. So I don't think costs are really a cause of worry even going forward in the next 2 or 3 quarters.
What is your best guess on the capacity utilization in the industry? And separately, your best guess on the rate of growth of demand.
Well, we are looking at this financial year ending at about 9% year-on-year growth. And going forward, I don't see this rate of growth coming off in the coming financial year also. So I would say a healthy growth of 9%, even some optimists say 10% for next year is viable.
So the capex?
Industry, the utilization levels are hovering around 70%. And since not much newer capacity is coming on, barring in the form of grinding units, I should see capacity utilization also increasing slightly over the next year.
Okay, so you're saying this muted demand situation that we're seeing currently in spaces like South India is just temporary?
Yeah, it's not muted demand. The demand has not been coming off, but it was a sudden jump in prices, which was based more on optimism that since one price hike has taken place, the second one would hold. But that is feeling a little resistant.
Okay, so that was a chat that we had with Sanjay Ladiwala on cement. There is a bit of a rollback in prices. The March price hike has not been entirely sustainable in the southern region, is what he told us. All right, one more stock that we have our eye on, and it's Jet Airways. Jet is down 2%. Now, which is the day when Jet is not in news, Rima? And again, I think still concerns about whether Etihad is going to play ball on the money, right?
Absolutely. So there is a report which came in from Mint earlier in the morning where the Etihad board is not agreeable to the terms, the bailout terms being proposed by the lenders. The other bone of contention is Naresh Goyal's demand that they remove the perpetuity clause. That is the one which caps his shareholding to 22%. Remember, on Thursday, that's yesterday, the company had said they're unable to repay $140 million of ECB to the HSBC Bank of UAE. So the woes continue for Jet Airways in terms of, the inability for them to make the repayments. And on the other hand, there is still no clarity on whether they will get that bailout or the money needed from Etihad.
Okay, that's a stock under pressure today. On that note.